Okay. So basically, let's first define kung ano ba ang share-based payment, no? Okay. So pag sinabi nating share-based payment, okay, so lahat yan ng transaction kung saan naka-receive ka ng goods, naka-receive ka ng services, okay, or whatever, okay, or as a consideration for, tawag dito, for whatever transaction, okay, wherein you are going to pay, okay, the other party, okay, babayaran mo siya in the form of either equity, okay, ibig sabihin babayaran mo siya ng shares mo mismo. Second is babayaran mo siya ng cash pero based on the value of your shares, or bibigyan mo siya ng option to receive equity or cash. Siya mamimili. Okay, so yun yung ating share-based payment. Basta ang concept niyan, share-based payment meaning the payment is either the shares itself, okay, or the equity itself, or cash that is based on the value of your shares, okay, or an option to receive either the shares or the cash. Okay, so let's go to the scope. Okay? So yung the concept of share-based payments, okay? So is not only is not going only limited to the share options na binibigay sa employees or dun sa mga transactions within the entity. It also encompasses the issuance of shares, pag-i-issue ng rights, pag-i-issue ng whatever type of equity, okay, in return for services and goods. Okay, so examples of your share-based payments also include yung share appreciation rights. Okay, so pag sinabi natin share appreciation rights, yan yung bibigyan natin ng parang utang yung lalabas. Yung recognize tayo ng liability based on the increase in the value of our company shares. Okay, you also have employee share purchase plans. Okay, so parang gagawa tayo ng project or ng program wherein we are going to allow our employees to receive or allow them to buy also shares of the company. So kumbaga meron na rin silang magiging ownership sa company. Okay? We also have employee share ownership plans, ganun din lang yun sa share purchase, okay? Share options, okay, and plans where the issuances of shares or rights may depend on market and non-market related conditions. So basically, ang purpose lang niyan is to entice or to encourage your employees or your company to or your company employees to provide better services. Kasi ang labas doon, kapag may ownership na sila doon sa company, mas magiging ganado silang mag-provide ng service kasi alam nila a portion of that is going to accrue to them, di ba? Kasi parang part owner na sila nung company. Okay? Yan. So, IFRS 2 applies to all entities. There is no exemption for private or smaller entities. So, kahit sino, basta meron silang ganyang klaseng transactions. Okay? Furthermore, subsidiaries using their parents or fellow subsidiaries' equity as consideration for goods or services are within the scope of the standard. Okay? So, possible kasi na ganun. Siyempre, there is a possibility na instead of the parent company shares, ang gagawin ni parent is igagamitin niyang consideration will be yung sa subsidiary. Okay? Kasi may control din lang naman siya over that particular entity. So, pwede yun. Okay? However, there are two exemptions to the general scope of the IFRS 2. Okay? First, the issuance of shares in a business combination kasi it is covered by IFRS 3. So, ano naman yan? Self-explanatory naman yan. Tapos, second is yung share-based payment within the scope of paragraphs 8 to 10 of IAS 32, now covered by IFRS 9, okay, and IFRS 7. Okay, kasi these are these are relating to derivative contracts, okay, which is not covered by our particular standard. Okay? So yun lang naman yung dalawa doon. Okay? All others pwede na. Okay? Tapos take note, IFRS does not apply to share-based payment transactions other than for the acquisition of goods and services, share dividends, the purchase of treasury shares, and issuance of additional shares are therefore outside the scope because this is not di ba diniscuss natin, these are equity transactions but are not covered as consideration for share-based payments or these are not related to share-based payments. Okay, so let's go to recognition and measurement. Okay, so for the recognition and measurement natin, depende kasi kung ano yung nire-recognize natin. Are we trying to recognize a liability or are we going to recognize yung ating equity? Okay, so the issuance of shares or rights to shares requires an increase in a component of equity. Kasi ikaw ay nag-issue ng rights, okay, or ng actual issuance of shares, okay? So IFRS 2 requires the offsetting debit entry to be expensed when the payment for goods or services does not represent an asset. So in other words, kung yung pinangbayad natin or yung inisyo natin na equity, 'di ba? Credit 'yon, obvious naman, credit naman 'yon. Yung debit natin, kung hindi yan relating to an asset that you acquired or a particular component of asset, then it is going to be expense. Kaya usually, kung makikita mo sa mga examples, kapag yan ay pertaining to share-based payment transactions relating to services of employees, ang debit dyan is compensation expense. Okay? So, yun. The expense should be recognized as the goods or services are consumed. Okay? For example, the issuance of shares or rights to shares to purchase inventory would be presented as an increase in inventory and would be expense only once the inventory is sold or impaired. So basically, normal transaction na yun. Ang pinaka-concern lang naman natin dito is yung recognition ng amount ng share-based payment. Okay. The issuance of fully vested shares or rights to shares is presumed to relate to past service, requiring the full amount of the grant date fair value to be expensed immediately. Okay, so kapag fully vested, okay, diba kasi later on you will encounter transactions na may tinatawag na vesting period. In other words, before kang maging entitled doon sa particular na shares or rights to purchase the shares, you need to provide services over a certain period. Okay, yun yung vesting period na tinatawag natin. So, kapag fully vested na siya, ibig sabihin na provide mo na yung service noon pa. Okay, or in prior periods. Okay, so kapag nirecognize mo yan, in full na. Wala na tayong gagamiting proportion. Okay, kasi fully vested na nga siya. Okay, so ang gagamitan natin ng proportion later on will be yung mga may vesting period pa. Such as yung nandito. The issuance of shares to employees with vesting periods, like in this example, 3 years pa yung vesting period, is considered to relate to services over the vesting period, or in other words, over 3 years. Therefore, the fair value of the share-based payment, okay, which is determined on the grant date, will be expense over 3 years. So, ratio and proportion, parang mangyari dyan is 1/3, 1/3, 1/3. Parang ganun yung mangyari. Okay, so as a general principle, the total expense related to equity-settled share-based payments will equal the multiple, okay, of the total instruments that vest and the grant date fair value of those instruments. So, yan na yung ginagamitan natin siya ng di ba kasi may basis yan. Parang example, number of employees, ilan shares yung ibibigay, tapos multiply mo kung ilang years nang nag-vest. So, kung kunyari dito sa example pa rin natin, so kung nag-vest na siya or nakapag-provide ka na ng 1 year out of the 3 years, so 1/3. Tapos, for the second year, cumulative computation, nakapag-provide ka na ng 2/3, tatanggalin mo yung in-expense mo ng last period para makuha mo yung expense for this period. Okay? So, yun siya. So, basically, that is how we are going to compute for that. Okay? So, yun siya. So, meron naman tayong illustration for us to understand. So, let us have yung share option muna. Share option grant. Okay? So, example, company grants a total of 100 share options to 10 members of its executive management team, okay, on January 1, 20x5. These options vest at the end of a 3-year period. The company has determined that each option has a fair value at the date of grant equal to 15. Okay? The company expects that all 100 options will vest and therefore records the following entry at June 30, 20x5. Okay, so ang nangyari ngayon, half year lang. Okay, half year tayo. So, yung 100 na options, multiply natin ng fair value on grant date na 15. Okay? Tapos, divide natin ng 6 periods. Bakit 6 periods? Kasi 3 years siya, pero 6 months pa lang tayo. So, ibig sabihin, half year. So, parang 1/6 ang recognize pa lang natin. So, ang lalabas dyan ay 250. Okay? That is for the 6-month period. Kung 1 year, 500. Okay? So, ganun lang siya. Next tayo, ito sa entry na to. Okay? If all 100 shares vest, the above entry would be made at the end of each 6 months or 6-month reporting period. However, if one member of the executive management team leaves during the second half of 20x6, okay, therefore forfeiting the entire amount of 10 options, the following entry on December 31 would be made. So, gagawin natin, syempre, ang basis na lang natin ngayon, based on 90 na lang, di ba? Kasi wala na yung isa. Wala na yung isang employee na tatanggap ng 10 options dapat. So, the entry there will be, compute muna natin yung cumulative amount. That's going to be 90 na lang na options times 15 na fair value. Okay, divided by 6. Okay? That's going to be, or basically, kahit mo nang i-divide ng 6, one-third na lang kunin mo kasi buong taon naman yon. Tapos, tanggalin natin yung na-recognize na nung previous period. Okay? Yun siya. So, ang mangyari dyan, bakit December 20x6 na to So, natanggal na natin yung unang 3 periods or unang 1 year and 6 months. Tapos, ito na lang i-expense natin. So, that's going to be 150 na lang. So, ibig sabihin, cumulative computation kasi tayo, wala naman tayong prior period adjustment. So, ang i-adjust lang natin yung expense natin for the current period. Okay? So, yan siya. So, normal lang naman yung computation na yan. Okay? So, we go to the measurement guidance. Okay? So, depending on the type of the share-based payment, fair value may be determined by the value of the shares or rights to shares given up or by the value of the goods or services received, whichever is more clearly determinable. Okay? Kasi particularly kapag ikaw ay nag-provide ng service, okay? Or ikaw ay tumanggap ng service from an outsider, okay? Tapos walang fair value yung shares mo, then ang magiging basis ng fair value ng shares mo will be yung fair value ng services na natanggap mo. So, always look for the fair value that is more clearly determinable. Okay. So, next tayo dyan. So, we go to the general guidelines natin. So, first, general fair value measurement principle. Okay. Transactions in which goods or services are received as consideration for equity instruments of the entity should be measured at the fair value of the goods or services received. Okay? Only if the fair value of the goods or services cannot be measured reliably would the fair value of the equity instrument granted be used. Okay? So, as a general rule, ang priority natin is yung fair value nung natanggap nating goods or services. Okay? Tapos, kapag hindi available yung fair value ng goods or services, then that's the only time that we will use the fair value of the equity instrument granted. Okay? Or yung provide natin. Okay? Second rule, measuring employee share options tayo. Okay? For transactions with employees and others providing similar services, ibig sabihin insiders sila. Okay? Or sila ay mga empleyado or within, or they have an employer-employee relationship with the entity. Okay? The entity is required to measure the fair value of the equity instruments granted because it is typically not possible to estimate reliably the fair value of the employee service received. Tama. Okay? Or the employee services received kasi ang concept niyan, yung sweldo naman na binibigay mo does not mean na yun na yung fair value ng services nila. That is based on a contractual agreement na yun yung sisweldo nila. Pero that does not necessarily mean na yun nga talaga ang fair value ng services ng empleyado mo. Okay? Next, when to measure the fair value in case of options. Okay? So in case of options, okay, for transactions measured at the fair value of the equity instrument granted, okay, fair value would be estimated at grant date. Okay? So ibig sabihin, kung kailan natin na-initiate yung options or yung employee options or whatever type of share options na yan, okay, it will be the grant date fair value. That will be the basis of our fair value. Okay? Discuss natin mamaya kung paano kukunin yan. Next tayo, when to measure the fair value naman in case of goods or services. So, ang nakalagay, fair value should be estimated at the date of receipt of the goods or services. So, kung kailan mo na-receive. Okay, wala namang problema doon. So, we go to the measurement guidance. For goods or services measured by reference to the fair value of the equity instruments granted, IFRS 2 specifies that in general, vesting conditions are not taken into account when estimating the fair value of the shares or options at the relevant measurement date. Instead, vesting conditions are taken into account by adjusting the number of equity instruments included in the measurement of the transaction amount so that ultimately the number of the amount recognized for goods or services received as consideration for the equity instrument granted is based on the number of equity instrument that eventually vest. In other words, for your computation, yung fair value on grant date, particularly for options, hindi na yan mababago. Ang mababago lang yung total amount based on the vested portion of the number of equity securities na mapoprovide mo. Similar to the example na nakita mo dun sa taas, hindi mababago yung fair value kasi yung fair value na-determine na natin yan noong grant date pa. Ang mababago lang is yung number of shares, yung number of options, okay, number of employees. So in other words, yung mga hindi natin makokontrol. Okay, kasi that ultimately ang number of shares or number of options na magbe-vest will be dependent on the performance of the employee or the decision of the employee. Okay? So we go to the other measurement guidance. Ito naman. Okay, other measurement guidance natin. Okay. So sabi doon, IFRS 2 requires the fair value of equity instruments granted to be based on market prices if available and to take into account the terms and conditions upon which those equity instruments were granted. In the absence of market prices, fair value is estimated using a valuation technique to estimate what the price of those equity instruments would have been on the measurement date, which is also on the grant date, in an arm's length transaction between knowledgeable willing parties. Standard does not specify which particular model should be used. So dito na natin ipasok yung mga models. Okay? So general rule kasi, hanapin mo na yung fair value. Usually the fair value will be available already. However, there are times na hindi available. So in case hindi available, meron tayong items dito. Yung at inception, in other words, grant date, fair value, estimation. Okay? Ang gagamitin mo, pwedeng Monte Carlo simulation. Yung Black-Scholes model. Tsaka yung binomial model. Okay, so yan yung mga pwede nating gamitin. Okay, so syempre yung mga yan hindi naman natin sure kung paano talaga ginagamit yan kasi that is based on the experts computation. So pang mga actuarial, mga actuaries yan or mga experts in valuation. Basta yan yung mga usual na ginagamit. Monte Carlo simulation, Black-Scholes model, tapos yung binomial. Okay? Kapag naman subsequent, okay, meaning after or fair value estimation after grant date. Okay, so the reason kung bakit natin kailangan tong gamitin kasi there is a possibility na wala talagang fair value on grant date. So sabihin na natin may limitation talaga as to how we can compute it on grant date. So what we are going to do is to rely on subsequent events that is going to be the basis of our fair value. So, ang gagawin mo dito, intrinsic value. Intrinsic value method. Okay? So, pag sinabi intrinsic value method, kunin mo yung value ng options or value ng shares subsequent or pwedeng a year after or at year end kasi compare mo siya dun sa grant date, parang ganon. Or the value of the shares in between two periods, yung increase niya, yun na yung intrinsic value. Parang ganon yung labas niya. Okay? So, yan yung ating mga methods. Okay. So, ito, if fair value cannot be reliably measured, okay, IFRS 2 requires share-based payment transactions to be measured at fair value on both listed and unlisted entities. Ito, yung sinasabi ko, IFRS 2 permits the use of intrinsic value, that is fair value of the shares less exercise price, okay, in those rare cases in which the fair value of the equity instruments cannot be reliably measured. However, it is not simply measured at the grant date. An entity would have to remeasure intrinsic value at each reporting date until final settlement. Yung sinasabi ko kanina, kapag hindi mo talaga ma-measure, you're going to use intrinsic value method, and the intrinsic value method is going to be determined by getting the differences of the values of the shares, okay, in between periods, okay, from period to period hanggang magkaroon ng settlement. Okay? Ultimately, ang pinaka-comparison mo dyan, magkano mo ba magkano mo ba ibebenta doon sa mga supposedly bibili ng shares. Tapos, i-compare mo siya doon sa fair value ng shares during your remeasurement periods or your measurement periods, which would be at least at the end of every period. So, parang ganun yung labas niya. Okay, so yan lang siya. So, next punta tayo sa performance condition. So, IFRS 2 makes a distinction between the handling of market-based performance conditions and non-market-based performance conditions. Okay? So, pag sinabi nating market-based conditions or performance conditions, okay, these are items that relate to the market price of an entity's equity, such as achieving a specified share price or a specified target based on a comparison to the entity's share price with an index of shares or share prices of other entities. Okay? Pag market-based performance conditions ay sinama mo or are included in the grant date fair value measurement, okay? Similarly, non-vesting conditions are taken into account in the measurement also. Okay, so we need to consider that, or we need to incorporate that, okay, in the measurement of your grant date fair value. Okay? However, the fair value of the equity instrument is not adjusted to take into consideration the non-market-based performance features. Okay? Yung non-market performance-based features, ito yung mga beyond market conditions. So in other words, yung sabihin natin, yung turnover ng employees, yung yung profit ng company, yung mga ganun, non-market based dun. Kasi hindi naman, kumbaga, pag sinabi kasi nating market based, yan, it is a product of how the market or how outsiders perceive your shares or perceive your company. So, yun, wala talaga tayong control doon, kaya kailangan natin siyang i-consider. Okay, pero yung mga non-market based, okay, hindi naman talaga siya related doon sa value ng shares mo. Okay? So, ibig sabihin, hindi siya ina-adjust or hindi siya gagamitin for the adjustment of the fair values. Okay? So, nakalagay dito, these are instead taken into account by adjusting the number of equity instruments included in the measurement of the share-based payment transactions and are adjusted each period until such time the equity instrument vests. Okay? So, balikan natin, dalawa yan. May market-based performance condition which is going to affect the fair value of the shares. Okay? Tapos number 2, merong non-market-based performance conditions which will not affect the fair value of the shares or the share options or the equity instrument but will affect the number of shares that is going to be distributed or distributable to the recipients. Okay? So parang example, ang may encounter mong ganyan sa problem is ganito. Sasabihin, parang ganito siya. If the company's share price or if the company share price is between 10 pesos to 15 pesos at the end of the vesting period, the fair value of the options or the fair value of the options will be 10 pesos. Tapos kapag mas tumaas pa, lumampas pa doon sa initial assessment ng value ng shares, ang fair value ng option magiging, sabihin natin, from original amount magiging 10 pesos, parang gano'n, or magiging 15 pesos din, gano'n. So, yun siya. Yung fair value na gagamitin mo at each reporting period will be dependent on the value of the shares. Okay? At each reporting period. So, mapapalitan yung fair value kasi market-based yung performance condition. Pero, kapag ang napalitan or ang nabago from each vesting period is, let's say, yung number of employees na natili, yung yung number of shares na ibibigay natin or number of options na ibibigay natin, hindi niya mapapalitan yung fair value. Pero mapapalitan niya ultimately yung amount ng expense or amount ng asset na i-recognize natin kasi magbabago yung mga multipliers natin. Okay, so yun siya. So ang tatandaan mo lang dito, dalawang component lang yan. Yung fair value at saka yung other multipliers. Okay? So yung fair value, yung fair value na gagamitin mo, depende dun sa market-based performance conditions na sinet ng company. Okay? So magbabago yan, depende dun sa market-based conditions. Yung multipliers naman, mababago yan based on the non-market performance conditions natin. Okay? So, yan. Basta may example tayo sa baba later para mas maintindihan natin. Okay? So, yan siya. Annual improvement, definition of vesting condition and market condition, and adds definition of for performance condition. Okay lang yan. Basically, na-discuss naman na natin yung mga yan. Okay? Pero kung gusto mo lang makita, meron kasi silang mga annual reports. Okay? You can see that. Pero it's the same. Yun din yung mga diniscuss natin. Okay. So we go to modifications, cancellations, and settlements. Okay. So the determination of whether a change in terms and conditions has an effect on the amount recognized depends on whether the fair value of the new instruments is greater than the fair value of the original instrument. Okay. Both determined at the modification date. So kasi pwedeng meron kang initial na in-offer tapos nung nagpalit ka ng isip, ganun, magkakaroon ng modification. So ang basis daw, whether there is a change in the terms is the value of the measure or value of the instrument that you're going to exchange. Okay? Modification of the terms on which equity instruments were granted may have an effect on the expense that will be recorded. Of course, kasi makaka-affect yung fair value or makaka-affect sa fair value. IFRS 2 clarifies that the guidance on modification also applies to instruments modified after their vesting date. If the fair value of the new instrument is more than the fair value of the old instrument, okay, example by reduction of the exercise price or issuance of additional instruments, the incremental amount is recognized over the remaining vesting period in a manner similar to the original amount. Okay? So in other words, walang prior period adjustment. Ang i-adjust natin yung mga subsequent period expenses or kung nag-vest na, ito yung total effect ng modification, i-recognize na natin doon sa mismong period ng change at total amount. Okay? If the modification occurs after the vesting period, the incremental amount is recognized immediately. O yun, madali lang naman intindihin yun. Wala nang vesting, wala nang hati-hati. Diretsong recognize. If the fair value of the new instrument is less than the fair value of the old instrument, the original fair value of the equity instruments granted should be expensed as if the modification never occurred. Okay? So, the original fair value of the equity instruments granted should be expensed as if the modification never occurred. So, ibig sabihin, kung mas mababa yung pinalit mo, hindi tayo magkakaroon ng prior period adjustment. Ang susundan pa rin natin yung original fair value. Okay? Kasi parang madaya di ba? Ang nangyari, ang ginamit mo originally yung mas mataas na value. So mas mataas yung ini-expense mo. Tapos biglang nagpalit ka ng mas mababa. So para hindi magkaroon ng inconsistency dun sa report natin, ang gagawin natin is ang i-recognize pa rin natin yung original fair value amount. Okay? Para hindi maging inconsistent doon sa report natin. Okay lang kapag mas mataas kasi kapag mas mataas, additional expense lang naman yun. Okay? Pero kapag mas mababa, hindi naman natin pwedeng i-reverse yung mga previous period na na-record na natin. Okay. Paano pag may cancellation? The cancellation or settlement of equity instruments is accounted for as an acceleration of the vesting period and therefore, any amount unrecognized that would otherwise have been charged should be recognized immediately. Okay? Meaning, supposedly, 3 years yung vesting period. Ang ginawa mo, kinancel mo or sinettle mo agad. So, ang mangyari, yung dapat sana na i-recognize mo pa in the next vesting periods, i-recognize mo na agad ngayon. Okay, in total. Any payments made with the cancellation or settlement up to the fair value of the equity instrument should be accounted for as the repurchase of an equity interest. Any payment in excess of the fair value of the equity instrument granted is recognized as an expense. Okay? So parang, di ba, pag nag-cancel ka, or ang mangyari, parang ika-cancel mo, i-debit mo yung share options kunyari. So debit mo yung share options, tapos credit mo yung cash. Okay? Ano yung i-credit mo na cash? Di ba yun yung ibabayad mo doon sa mga employees na supposedly tatanggap ng share options. Pero nga kinancel mo. So, sila yung tatanggap ng cash. Yung difference, okay, most probably kapag may excess, that's going to be recognized as additional expense. Okay, so i-debit mo rin as expense yun. So, in other words, parang ganito yun. Okay, in case magka-cancel ka, debit ka dito ng, yun to kunyari yan. Debit ka ng share options. Ayun o. Basang sabi doon, any payments made up to the fair value will be accounted for as the repurchase, thus any excess will be recorded as expense. So, share options tayo, kunyari dito, di ba credit kasi yun kapag nag-recognize ka. Bayad kang cash. Yan yun. So, paano kapag yung cash na binayad ko, mas mababa kaysa doon sa share options? Eh di obviously, meron pa akong i-recognize dito, di ba? Parang gain siya. Gain on repurchase. Dito yan. Pero bibihirang mangyari yan kasi syempre hindi naman papayag yung mga empleyado na mas mababa yung makuha nilang cash as compared doon sa na-earn na nila. Okay? So mas malamang ang mangyayari is ganito. Share options i-debit natin kasi i-buyback na nga natin. Tapos magre-recognize ka pa ng additional expense kasi yung settlement price or yung cash na binayad mo mas malaki kaysa doon sa original share options. Okay, so parang ganyan yung mangyayari. So yan yung entry mo. So ito kapag itong entry na to, ginalang natin ng if cash paid is less than the value of the options. Or basically yung yung equity securities or equity component. Yan ang entry mo. Pero kapag cash paid is more than, yan, ang entry mo na ganito. So, yan lang consideration natin dyan. Okay. New equity instruments granted may be identified as a replacement of cancelled equity instruments. In those cases, the replacement equity instruments are accounted for as a modification. The fair value of the replaced equity instrument is determined at grant date, while the fair value of the cancelled instrument is determined on the date of cancellation, less any cash payments on cancellation that is accounted for as a deduction from equity. Okay? So parang ang gagawin mo, i-debit mo yung share options na natanggal, i-credit mo yung, or kung hindi man siya share option, basta kung ano man yung equity component na natanggal. So parang ang entry mo ganito. I-debit mo yung equity component na old. Ayun, no? So sabi doon, the fair value of the replacement equity instrument is determined at grant date, while the fair value of the cancelled instrument is determined on the date of cancellation less any cash payments on cancellation that is accounted for as a deduction from the equity. Wala namang issue dyan kasi ang mangyayari, kung kunyari walang payment, kasi yung payment, ganito naman yung mangyayari eh. Okay? Pagkatapos, kung mag-recognize ka man ng panibagong equity component, edi debit ka lang ulit ng expense, credit ka ng yung equity component. Pero kapag nagpalit ka, ganito lang yun. Debit ka ng equity component na old, tapos credit ka ng equity component na new. Okay, yung bago. So, ganyan siya. Pero, any difference, okay, so malamang kasi yung equity component na old, okay, kung ganun yung cancellation niya, basta malamang may difference dyan. So, any difference will be recognized as expense. Okay, malamang sa malamang, expense talaga yan. Okay? Kasi nga, wala naman tayong diba sinabi nga natin kayo na kapag yung modification magre-result ng fair value na mas mababa, diba? Ang gagamitin mo, yung original pa rin. Diba? So, malamang ganyan yung lalabas dyan. Okay? Pero in this case kasi, repurchase yung ginawa. Dito, replacement lang. Okay? So, ito yung entry natin dyan. Okay. Yan. Disclosure requirements tayo. Okay, so disclosure requirements, the nature and extent of share-based payment agreement. So basically, bigay mo yung provisions ng share-based payment transaction, how the fair value of the goods or services received or the equity instrument is measured, okay? Or ano yung mga ginamit mong valuation techniques, okay? The effect of share-based payment transactions on the entity's profit or loss for the period and its financial position. So basically, parang i-disclose mo lang kung ano yung mga naapektuhang areas or anong naapektuhang line items ng company yung naapektuhan as a result of the share-based payment transaction. Effective date, wala na tayong gagawin dyan. Actually, matagal na yan. Ang last na update pa niyan, 2016. Okay? Yung 2016 na update niyan, yung ano lang, yung discussion lang nung market at saka non-market conditions. Okay? Wala nang na bago doon. Tapos transition, nilagay ko lang to pero wala na rin dapat problema sa transition kasi luma na yan, 2005 pa nag-transition. So dapat wala nang transition requirements ngayon. Nilagay ko lang siya for purposes of full content ng ating discussion. So basically, that is for the theory portion of our share-based payment transaction. Okay, let's go to the theory questions. So let us have number 1 first. So these are transactions in which the entity receives goods or services as consideration for equity instruments of the entity, including shares and share options. So this is what we call equity-settled share-based payment transactions. Kasi ang ipangbabayad natin ay yung equity instrument ng entity. Okay, so that's letter A. So next, these are transactions in which the entity acquires goods or services by incurring liabilities to the supplier of those goods or services for amounts that are based on the price of the entity shares and other equity instruments. So in other words, ang ibabayad natin ay pera, pero ang valuation ay based doon sa shares ng entity. So ang sagot ay letter D, cash settled share-based payments. Sorry. Okay, so yun yung number 2. Pangatlo, for equity settled share-based payment transaction, sorry, kulang yung equity settled. For equity settled share-based payment transactions, the entity shall measure the goods or services received and the corresponding increase in equity First statement, directly at the fair value of the goods or services received. Letter number 2, indirectly by reference to the fair value of the equity instrument granted if the fair value of the goods or services cannot be estimated reliably. So basically, saan ang correct dyan? Ang sagot ay letter C. Both 1 and 2 are correct. So ang first priority natin is hanapin mo muna yung fair value ng goods or services, tapos kapag hindi available, gamitin natin yung fair value ng shares or ng equity instrument on grant date. Number 4, for cash settled share-based payment transactions, an entity shall measure the goods or services received and the liability incurred at the letter B, fair value of the liability. Okay? So yun siya. So cash settled kasi yun eh. So ang mangyari doon, syempre kung magkano yung utang na babayaran natin, di ba? Or magkano yung utang talaga na i-recognize natin. So letter B ang sagot. Number 5, for cash settled share-based payment transactions, until the liability is settled, the entity is required to remeasure the fair value of the liability at each reporting date and at the date of settlement, and any changes in fair value are included in profit or loss. Doon lang naman yan, walang papasok sa OCI kasi wala namang component ng OCI na affected ng share-based payment transaction. Okay, so ulitin natin kapag yan ay equity settled, minsanan lang yung measurement ng fair value. Pwedeng meron siyang iba't ibang fair value amounts, pero always at grant date yung basis. Okay? Tapos hindi ka na magre-remeasure ng fair value. Okay? Kasi na-establish na natin yung fair value at the grant date. Pero for cash settled share-based payment transaction, kasi ang concept nun is you are going to remeasure the liability at the end of each period. So, kailangan ng remeasurement ng fair value kasi ang basis nga ng babayaran mong utang is the fair value of the shares na tinutukoy nating reference doon sa babayarang utang. Okay? 6. If share-based payment transactions provide a choice whether the entity settles in cash or issues equity instruments, the entity is required to account for the transaction as first statement, cash settled share-based payment transaction if the entity has incurred a liability to settle in cash or other assets. Or second statement, equity settled share-based payment transaction if no liability has been incurred by the entity. The answer is letter C, either 1 or 2. Okay? So, ultimately, ang magdedetermine kasi kung sino or kung ano yung tatanggapin is syempre yung recipient. Okay? So hanggat hindi ka pa sure kung ano yung component na or ano yung tatanggapin na component, kung equity ba or yung cash, then we need to recognize both the cash and the equity component of the share-based payment transaction. Next, number 7. It is the difference between the fair value of the shares to which the counterparty has the right to subscribe and the price the counterparty is required to pay for those shares. That is known as your intrinsic value. 8. It is the date on which the entity and another agreed party or another party agree to a share-based payment agreement, being when the entity and the counterparty have a shared understanding of the terms and conditions of the agreement. So this is your grant date. Next, number 9. What is the date on which the fair value of the equity instrument granted is measured? Siyempre, ang sagot, measurement date. Although there is most of the time, the grant date and the measurement date is the same. Pero technicality, okay, technical term kasi ang pinag-uusapan, kapag ang pinag-uusapan is yung date kung kailan mo mini-measure, yung fair value ng equity instrument, measurement date ang tawag doon. Okay? Kaya sa number 9, measurement date. 10. For transactions with employees and others providing similar services, the fair value of the equity instrument granted is measured in the grant date also. Okay? Letter B. Next, number 11. Which of the following transactions involving the issuance of shares does not come within the definition of a share-based payment under IFRS 2? Okay, so hanapin natin yung hindi pasok. Diba dalawa lang naman yung exception? Yung number 1, yung related sa acquisition ng subsidiary in a business combination or basically basta business combination IFRS 3. Tapos number 2 is yung mga relating sa commodity derivative transactions or commodity hedges, ganyan. So, ang sagot ay letter C. Okay? Yun lang naman yung sure na sure dyan eh. Okay? 12. Okay, which of the following is true regarding the requirements of IFRS 2? Okay? 'Di ba? Ang diniscuss natin kanina, walang exception. Pwedeng private, pwedeng listed, okay? Kung kahit sino man basta pumasok sila ng equities or ng share-based payment transactions, i-record pa rin nila yan. So, ang sagot ay letter D. Okay, so walang exemption from IFRS 2. 13. Okay. Many shares and most share options are not traded in an active market, therefore walang immediate na fair value ng measurement ng ating equity instrument. So, which of the following option valuation techniques should not be used as a measure of fair value in the first instance? In other words, during the grant date or initial measurement date. The answer is letter D, intrinsic value. Kasi yung Black-Scholes binomial at saka Monte Carlo simulation, those are all valuation techniques that will determine the fair value at the inception of the or at the grant of a particular share-based payment transaction. Yung intrinsic value, hindi mo magagawa yan without reference to a subsequent period. Okay? Kaya hindi mo magagawa talaga or bawal talaga. If not, kung hindi man bawal yung tamang term, ang tamang term siguro is hindi pwede or hindi possible na malaman mo yung intrinsic value without getting a subsequent value in a subsequent period. Okay? So, letter D. 14. In what circumstances is compensation expense immediately recognized under a share option plan? Okay, the answer is letter C. In circumstances when the options are granted for prior services and the options are immediately exercisable kasi nag-vest na. Okay? So, yun yung letter 14 natin, letter C. 15. An entity has entered into a contract with another entity which will supply a range of services. The payment for those services will be in cash and based upon the price of the entity's ordinary shares on completion of the contract. In accordance with IFRS 2, what types of share-based payment transaction does this represent? Okay? So, ano daw gagawin? Magbabayad ng cash based on the value of the shares. Di, cash-settled share-based payment transaction na yan. Letter C. 16. The entity has issued a range of share options to employees. Nagbigay ka ng share options for what purpose? For them to have rights to purchase your own shares. So that is going to be an equity-settled share-based payment transaction. Letter B. 17. How should an entity recognize the change? Okay? How should the entity recognize the change in the fair value of the liability in respect of a cash-settled share-based payment transaction? Basta ang lagi mong tatandaan, cash-settled yan, so kailangan ng subsequent remeasurement of fair value for every year-end until settlement, and all changes will be presented in profit or loss. Letter D. Number 18. Under PFRS 2, cash-settled share-based payment transactions will increase which of the following? Of course, it will increase the liability. Bakit liability? Kasi eventually it is going to be debited, tapos i-credit natin yung cash. Okay? Amounting to the amount of the liability also. 19. The following statements relate to a cash-settled share-based payment transaction, which is true. Okay? So, the fair value of the liability shall be measured at the end of each reporting period. Second statement, the fair value of the liability shall be measured at the date of settlement. So, parehas lang naman. Parehas namang tama yan, letter C. Basta, di ba, always remeasure lang ng remeasure hanggang masettle mo na. 20. The following statements relate to share options granted to employees in exchange for their services. Which statement is true? The services shall be measured at the fair value of the employee's services. Mali. Diba? We cannot use the employee services or the amount we pay dun sa employees as the fair value because that is an insider or basically a service that is under a contract for employer relationship. So that is not a fair value. Second, fair value shall be measured at the date the options vest. Mali din lang, 'di ba? The fair value shall be measured at the date the options are granted. Okay? So parehas na mali yan. Number 20 is letter D. Neither one nor two. 21, the full amount of compensation expense incurred in a compensatory stock option plan under the intrinsic value method is known at. Okay, so magkano daw yung compensation expense na i-recognize? Okay? So kapag intrinsic value method yan, it is going to be known at the measurement date. Okay, letter B. In this case, the grant date and the measurement date will be different dates. Okay? Like it is possible that you have granted the options or you have granted the equity instrument ng January pero ma-determine mo lang yung intrinsic value niyan at December or any subsequent period basta hindi automatic na makukuha mo yan at the grant date. So measurement date yan which is a different date from the grant date. Okay? So yun siya. So basically, to explain further, the grant date and the measurement date can be the same. Okay? Unless you are using the intrinsic value method because it is impossible for you to determine the intrinsic value if you are pertaining to the same period or to the same date. Okay? So yan yung 21. 22, the exercise price and market price of stock under a fixed compensatory stock option plan are equal on the grant date. The fair value of the option is greater than the option price. Under the fair value method, the answer is letter A. Compensation expense will be recognized in connection with the option plan. Okay? Kasi, ano naman yan meron naman tayong fair value na given, di ba? So, regardless kung ano pa man yung differences ng prices natin, basta kung nagbigay ka na ng option or ng fair value, or nagbigay ka na ng option price tapos merong fair value naman yung option, edi gamitin mo na yung fair value ng option as the basis of the compensation expense. So, the answer there is letter A. Walang problema kasi naka-fair value ka. Okay? Ito naman, the exercise price and the market price of a stock under a fixed compensatory stock option plan are equal on the grant date. The fair value of the option is greater than the option price. Under the intrinsic value method. So, intrinsic value method, ano gagawin mo? Maghintay ka muna ng isa pang period or isa pang date saka tayo magde-determine kung magkano yung ating i-recognize na expense. So, the answer is letter B. No compensation expense will be recognized in connection with the option plan. Okay? Because primarily, sinabi doon, equal. Okay? So, walang difference. So, wala tayong ma-recognize na intrinsic value. Kasi walang ang difference yung grant date or yung walang difference yung grant date value. Okay? At saka yung exercise price. So, in other words, walang difference. Okay? 24. Current financial accounting standards require, letter C, disclosure in the notes of financial statements of compensation expense under the fair value method if the intrinsic value method is used. So generally, parang ang concept dyan is, bakit ka gumamit ng intrinsic value kung kaya mo naman palang mag-measure ng fair value? Diba? So yun siya. Parang ang issue kasi is ganito. Kung ikaw ay gumagamit ng fair value, wala naman ng problema, hindi na natin ipapadisclose bakit hindi ka nag-intrinsic value. Kasi obviously, mas reliable kapag gumamit ka ng fair value method or yung mga fair value estimations natin. Pero, kapag ikaw ay gumamit ng intrinsic value at pwede ka naman palang gumamit ng fair value or ng fair valuation natin based on either active market or yung mga valuation techniques natin. So, kailangan mong i-disclose at kailangan mong explain bakit yun ang ginamit mo. Okay, so letter C ang sagot natin dyan. 25, IFRS 2 applies to all types of share-based payment transactions. This include, tatlo lang yan, di ba? Equity, cash, or choice between cash or equity. So, letter C, 1, 2, and 3. 26 examples of arrangements that come under IFRS 2 are call options that give staff the right to purchase. Call options kasi to eh. So, purchase stocks yan. So, malamang okay yan, pasok. Share appreciation rights, yan yung cash settled kasi ang basis ng babayaran mo is the increase in the fair value of the shares. In-kind capital contributions of property, plant, and equipment in exchange for shares. So, ganun din, equity settled. Share ownership schemes under which staff are entitled to receive and undertaking shares in exchange for their services. Okay, so pwede rin. Payment of services made to external consultant that are calculated by reference to the undertaking share price. So, ganun din, pasok din lang yan. So, lahat yan ay pasok dun sa ating share-based payment transaction. So, letter D. So, ang babantayan mo lang naman dyan is yung nanggaling sa commodity hedges at saka yung dun sa business combination. So, yun lang naman ang hindi pasok dyan. Okay? So, yun yung babantayan. Okay. Sige. Next tayo. 27. Okay. In March, the undertaking offered options to new staff subject to shareholder approval. The awards were approved by the shareholders in August. The scheme started in September. So, the grant date is August. Kasi doon na-approve. The measurement date will be September. Kasi yun yung start ng pag-apply ng scheme natin. Okay? So, basically, that is our answer there. So, di ba sabi nga natin, yung grant date at saka measurement date, pwedeng parehas. So, pwede ring hindi. Okay, basta ang sigurado natin, laging mauuna yung grant date. Hindi pwedeng nag-measure ka na wala pang grant na na-approve. So, 27 letter B. 28. If the goods are received on more than one date, the undertaking should measure the fair value of the equity instruments granted on letter B, each date when goods or services are received. Okay? Self-explanatory, syempre, kung kailan mo na-receive, doon ka magme-measure. Okay? Hindi naman pwedeng magme-measure ka agad, wala ka pang i-record na transaction for that particular receipt, di ba? Okay, so yun lang naman yung item dyan. Okay, next. 29. An undertaking grants share options to its staff. Certain performance conditions needs to be satisfied over the next 4 years for the options to be exercisable. Employees has to remain working for the undertaking during this period to become entitled to the award. The expense should therefore be recognized over the 4-year vesting period. Letter B. If the undertaking cannot estimate reliably the fair value of the goods or services received, then the undertaking will use the indirect method, which is by reference to the fair value of the security. Diba? So the answer is letter A. 31. An undertaking granted share options that become exercisable when the market price increases by at least 10% in each year over the next 3 years. At the end of 3 years, this target has not been met. So ano to? This is a market condition. Okay? So anong gagawin natin doon? The answer is letter B. The undertaking should not revise the grant date, fair value, and should not reverse the staff benefit expense already recognized. Okay? So, ang mangyari, wala kang prior period error or walang prior period adjustment na gagawin. Okay? So, yung na-recognize na, yun na siya. Okay? So, kasi kwan pa rin naman yun eh, na-provide mo na yung service na mga yun. So, ang mangyari lang, after nung rendering ng services or after nung vesting period, kung ano lang yung na-entitle para sa mga pagbibigyan mo ng option, yun na yung may exercise. Wala lang madadagdag. Okay? Yun yung concept niya. So, kumbaga, yung na-earn na, hayaan mong gamitin ng mga employees or hayaan mong gamitin ng mga entitled for that. Yun nga lang, hindi kasing laki as compared to kapag na-meet sana yung market condition. Okay? 32, management introduce a new equity settled compensation plan for with a non-market performance condition. So, non-market naman to. During the following year, after a turn down of the undertaking's fortunes, it considers that there is no chance that it will meet the target. Okay, so anong gagawin mo? Letter A. The cumulative expense at the end of the second year will be adjusted to nil and the charges is reversed in the current year. Bakit? This is a non-market performance condition. Okay? Kasi ganito siya, no? Kapag market condition siya, hindi mapapalitan yung fair value, di ba? So, basically, meron ka pa rin mako-consider or meron ka pa rin mako-compute. Kapag non-market performance condition yan yung other multipliers na tinutukoy natin, di ba? So, kapag hindi na-meet yung non-market performance condition, edi, yung other multipliers mo, zero na. So, if your other multipliers are zero, then supposedly, wala ka pala talagang dapat ni-recognize. That's why there will be a reversal, okay? And there will be, kumbaga, yung previous na ma-recognize, wala na. Tapos, mag-recognize ka ng reversal for the current period. Okay, so ganun yung kwento niya. Okay, so the answer for 32 is letter A. 33, in the absence of market prices, anong gagawin mo? Try mo munang i-estimate. Okay? So, pag walang market prices, estimate mo muna. Okay? Pag walang estimation at inception, gamitin mo yung estimation subsequent, which is intrinsic value. Okay? So, the answer is letter D. Okay. 34. For cash-settled share-based payment transactions, IFRS 2 requires an undertaking to measure the goods or services acquired and cash, di ba, cash settled? So, recognize a liability, tapos remeasure it every subsequent period until settlement. So, the answer is letter B. Okay, 34, letter B tayo dyan. 35, IFRS 2 prescribes various disclosure requirements to enable users to understand nature and extent of share-based payment, how the fair value of the goods or services is received, or the fair value of the equity instrument, effects of share-based payment, transaction, impact on clients on these transactions. Di ba yung required disclosure natin sa task kayo, yung tatlo lang? So yung tatlong yun yung 1, 2, 3 lang. Yung pang-apat, hindi. Yan, wala yan. Impact on clients. So letter C ang sagot, 1, 2, 3. 36, IFRS 2 covers transfers of equity, transfers of instrument of another undertaking on the same group. So, either sarili mong shares or shares ng subsidiary mo. Okay, so letter C yan, both A and B. 37, IFRS 2 covers equity instruments, cancellation, transactions in which the undertaking acquires goods as part of a takeover. So, that is a business combination. So, the answer is 1 and 2 only. Letter B. 38, if the fair value of the equity instrument granted is used, the fair value of the services received during a particular accounting period, letter A, is not affected by subsequent changes in the fair value of the equity instrument kasi na-establish na natin yung ating fair value on grant date. 39, if the performance condition is a market condition, the estimate of the length of the expected vesting period shall be consistent with the assumptions used in estimating the fair value of the options granted, and letter B, shall not be subsequently revised. So, similar dun sa question sa taas kanina, yung nauna, kapag market condition ang usapan dyan, walang effect sa fair value. Okay, so, kapag market condition yan, tuloy-tuloy pa rin tayo sa pag-recognize. Dun sa non-market lang tayo magkakaroon ng reversal or revisions. So, 40, if the performance condition is a non-market condition, okay, dun magkakaroon ng ito. Undertaking shall revise its estimate of the length of the vesting period considering yung mga hindi na-meet na non-market condition. So, that's letter A. 41, if the vested equity instruments are later forfeited or in the case of share options, the options are not exercised, anong gagawin? Letter A, the undertaking should use the reload option. Okay, so ano yung reload option? So basically, the concept here is to allow the recipients to to allow them to have another chance to exercise the option. Parang ganun yung labas niya. So, undertaking should use the reload option. Or basically, kung wala talaga, ang mangyayari dyan is yung share options, papasok din lang naman yan as share premium ng company later on. Okay? 42, okay? Reload feature shall, letter B, not be taken into account when estimating the fair value of the options granted at the measurement date. Because basically, reload features are not market-based. Okay? Ito, non-market yan eh. Okay? So, ang basis lang natin dapat yung market-based, di ba? So, letter B ang sagot dyan. 43, modifications should be viewed as letter C, incremental instruments. Di ba? Sabi nga natin, pag nag-modify tayo at mas mataas yung ipinalit, additional expense siya. So, incremental instrument. Kapag mas mababa naman, as if hindi tayo nagpalit, di ba? So, walang bababawas. Laging may increments na mangyari pero hindi pwedeng mabawasan. Okay? So, letter C ang sagot. And 44, if it does not increase. If it does not increase the total fair value of the share-based payment arrangement or is not otherwise beneficial to the member or staff or service provider, then it should be ignored. Letter D. Pag sinabing it, okay, it pertains to the modification. Okay? So, if the modification does not increase the total fair value or does not benefit, then it will be ignored, meaning mag-stick tayo dun sa original. Okay? So, those are the answers to our questions or dun sa ating mga theory questions. Okay, so let's proceed with the problem portions. Start tayo sa question number 1. An entity issues shares as consideration for the purchase of inventory. The shares were issued on January 1, 20X4. The inventory is eventually sold on December 31, 20X5. The value of the inventory on January 1, 20X4 was 3 million. This value was unchanged up to the date of sale. The sale proceeds were 5 million. The shares issued have a market price of 3.2 million. Which of the following statement correctly describes the accounting treatment of this share-based payment transaction? Okay. So, sabi dun sa letter A, equity is increased by 3 million, inventory is increased by 3 million, and the inventory value is expense on sale on December 31, 20X5. Okay? Letter B, equity is increased by 3.2 million, which is wrong already. Inventory is increased by 3.2 million, and the value of the inventory is expense on sale on December 31, 20X5. Okay. So, huwag natin basahin yung iba. Basta sigurado tayo kasi 'di ba? First priority determine the fair value of the goods received. So that's 3 million. So 3 million, tama 'yon. Yun yung magiging increase ng ating equity, tapos i-expense natin siya 20x5. So the answer is letter A. Okay? Letter B, wag na yan. Sayang lang ang oras natin at saka yung mga iba. 3 million, 3 million, expense over 2 years. Mali. 3.2, 3.2, expense over 2 years. So mali siya. So ang tama lang is letter A. Number 2. An entity issues fully paid shares to 200 employees on December 31, 20x4. Normally, shares issued to employees vest over a 2-year period, but these shares have been given as a bonus to the employees because of their exceptional performance during the year. The shares have market value of 500,000 on December 31, 20x4 and an average fair value for the year of 600,000. What amount would be expensed in the income statement for the above share-based payment transactions? So obviously, number 1, wala na tong vesting period kasi fully vested na siya. Okay? Number 2, kailan binigay? December 31, 20x4. So that is the grant date. So kailan binigay dun din, di ba? So that is also the measurement date. Magkano ba ang amount na nung grant date? Also the measurement date, 500,000. So the answer for number 2 is letter B, 500,000. Number 3. An entity grants 1,000 share options to each of its 5 directors on July 1, 20x4. The options vest on June 30, 20x8, so that's basically 4 years. The fair value of each option on July 1, 20x4 is $5. And it is anticipated that all of the shares share options will vest on June 30, 20X8. What will be the accounting entry in the financial statement for the year ended June 30, 20X5? Or basically, this is after 1 year, no? Okay, after 1 year. So that's going to be 1,000 share options, tapos 5 directors, so that's going to be 5,000, okay? Tapos $5, so that's going to be, lagay na lang natin dito yung computation natin. Okay, so that's going to be 1,000 share options, multiply natin ng 5 employees, multiply ulit natin ng $5. Lagyan na lang natin dyan. Okay? So that's equal to 5,000 times 5. So that's going to be 25,000. Kaso, over 4 years. So, divide by 4 natin yan. 6 to 50, no? Yan. Okay? So, ang gagawin mo, recognize natin yung amount na 6 to 50 muna. Kasi may vesting period tayo na 4 na taon. Okay? So, the answer there is letter C. Number 4, an entity or entity A is an unlisted entity and its shares are owned by 2 directors. Okay, the directors have decided to issue 100 share options to an employee in lieu of many years service. However, the fair value of the share options cannot be reliably measured as the entity operates in a highly specialized market where there are no comparable companies. The exercise price is 10. Yan yung basis natin ng i-compare. And the share options were granted on January 1, 20X4 when the fair value of the shares was also estimated at 10. So wala pang intrinsic value. At the end of the financial year, the value of the shares was estimated at 5 na or 15. Okay? So meron ng difference ngayon na 5 which is the intrinsic value. Okay, what value should be placed in the share options, okay, issued to the employee for the year ended December 31, 20X4? So that's going to be 100 share options times 5 pesos na intrinsic value. So that's going to be 500,000. So the computation there will be 100. Sorry, palitan natin yung kulay. That's going to be 100 share options multiplied by 15. Okay, minus 10. Okay, which is the intrinsic value. Okay, so lalabas dito is 500. So yun yun. Next tayo. So, Ashley, a public limited company, has granted share options to its employees with a fair value of 6 million. Okay, the options vest in 3 years' time. The Monte Carlo model was used to value the options and these estimates have been made. Grant date natin, estimate of number of employees leaving the entity during the vesting period is 5%. Noong January 1, 20X5, revisions of estimate of employees leaving to 6% before vesting date, and then December 31, 20X6, actual employees leaving is 5%. Okay. So, yung fair value, na 6 million based on na yan? Based on our Monte Carlo simulation. So, wala na tayong paproblemahin. Yan na yung fair value. Ang magbabago na lang dyan yung mga non-market based, okay? Na measurements such as yung turnover ng employees. So, sagot sa first question, what would be the expense charge in the income statement for the year December 31, 20X4. So, ibig sabihin yung pang current year. So, ang gagawin mo lang, kukunin natin yung 6 million. Okay? Pagkatapos, sabi doon, based on the estimation daw, 5%, okay, yung aalis. So, ibig sabihin, 95% yung mariretain. Tapos, multiply mo ng 1/3 or divided by 3 mo na lang kasi 1 year pa lang ang nag-vest out of the total 3 years. So, that's going to be 1.9 million. Second, magkano naman daw yung i-recognize na expense for year December 31, 20X5 naman. So, ganun ulit, hindi naman magbabago yung ating fair value. 6 million pa rin yan. Yun nga lang, ang estimate natin, 6% yung aalis, di ba? So, 94% yung mariretain. Multiply mo ng 2/3. Okay, yun na yung total. Ito na yung cumulative na earn natin. Okay? Or na-earn nung employees. Ibawas natin yung last year na 1.9 para makuha natin yung pang this year. So this year, that's going to be 1.86 million naman. Okay, so yan yung i-recognize natin expense. Kasi cumulative computation tayo. Tapos yung panghuli, sabi doon, ultimately 5% ang umalis. So basically, 95 yung na-retain. So 6 million times 95%, bawas natin yung 1.9 at saka 1.86. Okay? So ang may iwan 1.94. So yun na yung ating expense for this period. Okay? Kaya letter D ang sagot natin. So ganun lang naman yung simple computation natin ng share-based payment. Okay, we go to the next questions or next set of questions. Use the following information for the next 3 questions tayo. So on January 1, 20X1, the company grants 1,000 share options to each of its 100 key employees, conditional upon each employee remaining in the company's employ over the next 3 years. So vesting period 3 years. The fair value of each share option is 60 pesos. So huwag mo nang tanungin kung saan nanggaling, at least binigay na merong 60 pesos. On the basis of a weighted average probability, the company estimated on January 1, 20X1 that 20% of employees will leave during the 3-year period and therefore forfeit their rights to share options. During 20X1, dalawa ang umalis. The entity revised its estimate of total employee departures over the 3-year period from 20% to 15%. During 20X2, additional 3 employees left. The entity revised its estimate of total employee departures over the 3-year period from 15% to 12%. During 20X3, additional 5 employees left. Okay? So, magkano ang i-recognize na expense for 20X1? Okay. So, ang gagawin natin is, compute muna natin dito. Okay, so labas natin yung computation. So paano natin i-compute yung item na yan? So meron tayong ibibigay na 1,000 share options multiplied by 100 employees, di ba? Pero ang problema natin, hindi 100 yun. Kasi ang sinabi, during 20X1, okay, dalawa yung umalis, tapos the entity revised its estimate of total employee departures over the 3-year period from 20% to 15%. So, ibig sabihin, kung 15% yung aalis, 85 yung may iwan, di ba? Total yun, no? Total. So, ibig sabihin, times 85 to, employees, times 60, tapos, ilang years to? 3 years, divided by 3. Okay, so, compute lang natin. So that's 1,000 share options times 85 employees times 60 divided by 3. So that's going to be 1,700,000. Yan. Okay? Nung kasunod na taon, ang tinatanong, how much is the accumulated share premium from share options outstanding as of December 31, 20X2? In other words, yung accumulated na for 2 years. Okay? So, ang gagawin mo doon is ganito. Ang gagawin mo, 1,000 times ilan din in-expect natin. During 20X2, additional 3 employees left. Ni-revise mo from 15% to 12%. So, gagawin natin tong 88 na lang yung may iwan. Times 60 times 2 over 3. Yan siya. Accumulated ang tinatanong eh. Okay? So, it's going to be 1,000 times 88 times 60 times 2 divided by 3. So, that's going to be 3,520. Okay, ito yung accumulated. Tapos, kung gusto mong makompute yung expense, ang gagawin mo, 3,520 minus yung na-recognize mo na 1,7. So, ang lalabas dito ay minus 1,7 tayo dito. 1,820. For current year. Yan. Okay, para lang comprehensive yung computation. Tapos, how much is the salaries expense recognized in 20x3? So, for 20x3 naman, ang gagawin natin dyan, ganun din, 1,000 times. Ilan na lahat yung umalis? May umalis na 2, tapos may umalis na 3, so 5 na yon. Tapos may 5 ulit na umalis. So, ibig sabihin, 90 yung naiwan. Okay, times 60. Yun na lahat yun. Total na natin. So, that's going to be 1,000 times 90 times 60. So, that's 5,400,000. Ibawas natin yung na-recognize nung last year. Okay, na 3,520. Okay, so 5,400 minus 3,520. That's 1,880. So, 1,880 yung expense natin this period. Okay, so yan siya. Okay, so yan yung sagot natin sa 8, 9, and 10. Okay, we go to 11. Medyo mahaba-haba to. Mahaba yung kwento niya. So, on January 1, 2011, B Company grants share options to each of its 10 employees, or 100 employees, sorry. The share options will vest on December 31, 2013, so that's 3 years. Provided that the employees remain in the company's employ and provided that the volume of sales of a particular product increase by an average of between 5% and 10% per year, okay, then the employees will receive 100 share options. Kapag yung volume of sales is between 10 to 15% per year, ang matatanggap naman nila 200 share options. If the volume of sales increase is 15% or more, then it's going to be 300 share options. So, itong mga to, yung unang binigay sa'yo, yung mga increase, these are non-market performance conditions. Okay? Itong mga volume na to, non-market yan. Non-market performance conditions. Pero itong sa baba, on January 1, okay, B Company estimates the share options to have a fair value of 30 per option and expects that the volume of sales of the products will increase by an average between 10 to 15%. The company also expects on basis of weighted average probability that 20 employees will leave before the end of 20XT. So, ibig sabihin, ito na gagamitin nating fair value. Okay, so binigay na siya. Okay, so this is an example of a problem wherein there is a non-market performance condition. So, in other words, ang issue lang natin dito is whether or not masasatisfy ba natin yung non-market performance condition. Okay, pero in this case, sundan lang natin yung problem. Ang sinasabi, pinapahanap sa atin, what amount of remuneration expense should the company recognize on December 31, 2013 after 2 years? So, kung after 3 years, kung yung ang pinapakompute sa atin is yung last year, huwag na tayong mag-start sa year 1. Diretso na agad tayo ng 2012. Para ito yung basis natin ng ibabawas natin sa 2013. Okay? So, gawin natin, 2012 agad tayo mag-compute. Okay? So, for 2012, ang gagawin natin doon, magbibigay tayo ng share options. Okay? So, sabi, at the end of 2012, product sales has increased by 18%. And the company expects that sales will increase by an average of 15% for more or more over the 3-year period. 6 employees left. So, ang gagawin natin, ilan yung share options na ibibigay natin? Kung 18%. If that's 18%, that is going to be 300 share options. So, 300 share options multiplied by ilan yung employees. Di ba may 100 employees? Ang estimate nila, 4 pa yung aalis. So, i-consider natin yung umalis na ng 2011. Noong 2011, may 8 na umalis. Okay? Pagkatapos, may umalis pa na 6. So, 8 plus 6. So, that's going to be 14. Okay, 14 na yung umalis. And expects that 4 employees will leave the company during 2013. So, ibig sabihin, 8 plus 6 plus 4. So that's going to be 18 employees. So kung 18 yung aalis, 82 yung maiiwan. So 82 employees ito, multiply natin ng fair value ng option na 30. Cumulative na lang agad tayo ha. Okay, so compute natin. That's going to be 300 times 82 times 30. Okay, tapos 2 years na tayo, di ba? So tuloy na lang natin times 2/3. Okay, so times 2 divided by 3. So 492. Okay, para wala na tayong problema. This is the accumulated. Okay, pagdating natin ng 2013, sabi, at the end of 2013, sales had increased by an average of 15% over the 3-year period while only 2 employees had left during 2013. Okay, average of 15. Okay, so sinabi kasi 12 between 10 to 15 tapos kapag parang mali ito. 10 to 15 kasi ito eh. Tapos kapag yung sales ay dapat average of more than dapat to, no? More than 15%. So technically, kung 15% lang siya, ano ba nangyari? Sales had increased by an average of 15% over the 3-year period. So ibig sabihin, doon lang tayo sa 10 to 15. So 200 share options lang dapat yung i-grant natin. Okay? Tingnan natin ha. Sundan lang natin yung given kasi yun naman talaga yung ano. Tapos ilan yung umalis? 2 employees left. So ang umalis na 8 plus 6. So that's 14 plus 2. So 16 yung umalis. So 84 yung naiwan. 84 times 30. Ito na yung total natin. Okay, so that's going to be 200 times 84 times 30. So 504. Okay. So pag 504 gagamitin natin, hindi lalabas yung sagot. 492,000. So 300 pa rin gagamitin natin. So dapat ang average of more than dapat to 15 kasi dapat ito average of more than 15 kasi 10 to 15 yun, so dapat more than na to, more than 15%. Okay, so 300 pa rin to dapat. Okay, so 300 times 84 times 30, that's 756 minus yung 492, 264. Okay. Yan. So, yun ang sagot natin for 2013, 264. So, iniba lang natin yung narrative kasi nakakalito yung narrative niya. So, ang based dun sa information, kung 15% lang yun, dapat 200 lang yung share options na tatanggapin eh. Okay? So, inayos lang natin para makuha natin yung tamang sagot. Kasi kung hindi natin i-consider yon, then ang answer natin will be yung original kanina. That's going to be 200 times 84 times 30. Kasi bawas natin yung 492,000. 12,000 lang dapat yung expense natin. Pero wala namang lalabas na sagot kung i-maintain natin yon. So, inayos na lang natin yung narrative para lumabas yung answer. Okay, so that is for number 11. Number 12. Okay. So number 12, anong tinatanong sa atin? Magkano ang remuneration expense that the company should recognize on December 31 income statement. Okay, sige. So the company grants its executive officers 100,000 or 10,000 share options conditional upon the executives remaining in the company's employ until the end of 2013. So 3 years ulit. The exercise price is 40. However, the exercise price drops to 30 if the company's earnings increase by at least an average of 10% per year over the 3-year period. So this is earnings kasi ito eh. So non-market pa rin yan. On January 1, 2011, the company estimates the fair value of the share options with an exercise price of 30 at 16 pesos. Okay? And if the exercise price is 40, the company estimates the share options will have a fair value of 12. Okay? So, ito, gumawa na tayo ng gumawa na tayo ng dalawang fair value computation, okay? Based on the market effect of the non-market condition. Okay? Kasi yung tawag dito, yung pag-achieve ng earnings is a non-market condition. Pero yung pagbabago ng exercise price, okay, is a market condition ngayon. Kasi pag magbabago yung exercise price, then ultimately magbabago talaga yung fair value ng options, di ba? That's why we made two computations already of the market or of the adjustment in fair value as a result of the market condition. Okay? So, ang mangyari, titignan natin later on kung ano yung exercise price para malaman din natin kung ano yung gagamitin nating fair value. 16 pesos ba o 12 pesos? Okay? Basta kapag 30 ang exercise price, 16 ang value ng share options. Kapag 40 naman daw, ang exercise price, 12 pesos lang ang value ng share options. Okay. So, for 2011, the company's earnings increased by 12% and the company expects that the earnings will continue to increase at this rate over the next 2 years. So, kung 12% yon, edi magiging 30 na lang yung exercise price, 16 ang fair value. Okay? While in 2012, the company's earnings increased by 13%, so pasok pa rin, gagamitin pa rin natin yung 16 pesos na fair value. Pero noong 2013, the company's earnings increased by only 3% and therefore the earnings target was not achieved. So babalik tayo sa fair value ng option na 12. Okay? So since ang tinatanong lang naman sa atin is 2013, so mag-start na tayo ng 2012. Okay? 2012 na agad ang first computation natin. Noong 2012, ang gagawin mo, 10,000 shares or share options multiplied by the fair value of the option being 16. Di ba? 16 ngayon kasi ang exercise price natin 30. Kasi na-meet naman natin yung earnings. Okay? Tapos naka 2 years na tayo. 2 years out of the 3 years. So ang cumulative natin will be ito. So that's sorry. Okay, so that's basically, labas lang yung calcu. Okay, so that's going to be 10,000 times 16. Okay, pagkatapos divided by 3 times 2. So 106,667. Yan na yung accumulated. For 2013, ang problema natin, 10,000 yon. Pero ang exercise price ay naging 40. Bumalik ng 40 kasi hindi na-meet yung earnings target. So, magiging 12 na lang yung value ng option. Tapos, total na natin. So, that's going to be 120,000. Okay? Ibawas natin yung na-recognize na nung last year na 106,667. So, yung may iwan na lang is 13,333, which is the expense for the period. Yan. Kaya ang sagot natin ay letter A. Okay, so yan yung sagot natin sa number 12. Okay, number 13 tayo. So number 13, this is a problem na magkakaroon tayo ng option as to whether ang ibibigay natin ay cash or shares. Okay? So, on January 1, 2021, each company granted 20,000 shares with a market value of 30 per share to its key officer conditional upon the completion of 3-year service. By the end of 2012, the share price has dropped to 26 per share. Okay, immediately, each company adds a cash alternative to the grant whereby the officer can choose whether to receive 20,000 shares or cash equal to the value of the 20,000 shares on vesting date. Tapos, which is on December 31, 20x3. On December 31, 20x3, the share price is 24. Okay. So, ang gagawin natin dito, bago natin ibigay yung sagot, compute muna natin. Okay? So, start tayo dun sa original. Okay, yung original, bibigyan mo siya ng 20,000. Okay. At that time, ang fair market value niya ay 30. Okay. So, that's going to be equal to 600,000, no? Okay. Okay. Conditional upon the completion of the 3-year service. Okay. At the end of 2012, okay, the share price has dropped to 26 per share. Okay? So, this is, pagdating ng 20x or 2012, 20,000 na lang times 26. Okay? So, that's going to be 20,000 times 26. That's going to be 520. 520. Okay. So, 520 na lang yung value. At that point, nagkaroon na ng alternative or binigyan na ngayon yung recipient ng alternative kung gusto ba niyang tanggapin or tatanggap na lang siya ng cash after the vesting period or gagamit siya or itutuloy niya pa rin yung pag-receive ng shares. Okay? So, in other words, in this case, for 2012, dahil 520 na yan, with the original na 600,000, the difference, okay, yung difference dito na 80,000, okay, so parang ang mangyari dyan, 600,000 original minus the 520,000 na value ng cash option kung ngayon na siya, the equity portion will be 80,000. So 80,000 is going to be the total equity component. Okay? Ayan siya. So, as of 2012, ano ngayon ang gagawin natin? For 2012, ano ang cash component or ang cash compensation component natin? That's going to be equal to yung 520,000 kasi yan na yung cash component niya. Pero, ang na-provide mo pa lang is 2 years out of 3 years, di ba? 2/3 pa lang. Okay? So, ang accumulated nito, that's going to be 520 times 2 divided by 3. This is 346,667. Okay? Tapos, yung equity component, okay, it's going to be equal to the 80,000 times 2/3 din lang. Okay? So, that's going to be equal to, anong 2/3 ng 80? 80,000 times 2/3. So, that's 553,333. Okay? So, yan siya. Pagkatapos, pagdating nung 2013 nan, okay? Ano ulit ang cash component ngayon yan? Ang cash component na yan will be yung value nung 20,000 shares multiplied by the 24 pesos na per share value. That's going to be 20,000 times 24. That's going to be 480. Okay, 480. Kung ibabawas natin yung 346,667, 346,667 na na-recognize na before, ang lalabas dyan ay 133,333. Okay? Para naman doon sa equity component, hindi naman nagbago yung equity, di ba? Yung 80,000 pa rin yun. Okay? Yan na yun. Minus na lang natin yung 53,333 na na-recognize na nung previous year. So, ang lalabas dyan ay 80,000 minus 53,333, 26,667. Okay, so yan siya. So question, what amount of remuneration cost should the company recognize on its December 31, 2023 income statement? Yun yung mga current portion dito. Okay? So yan yung cash alternative. Usin lang natin yung solution. So that's going to be the cash alternative na 133,333 at saka yung equity alternative na 26,667. Okay, so pag pinag-add natin yan, 133,333 plus 26,667, that's 160,000. 160,000. So yun ang sagot dyan. What is the balance of the liability component of the instrument as of December 31, 20X12? Yun yung nirecognize natin dito. Yan. Okay, dyan na lang yan. Kaya 346,667 siya. What is the balance of the liability component of the instrument on December 31, 20X3? Ito yun, yung accumulated. Yan, accumulated. Okay. What is the balance of the equity component of the instrument as of December 31, 2012? Yun yung ito, 2012 na equity component. Yan, 2012. Equity component na yan. Tapos, what is the balance of the equity component of the instrument as of December 31, 2013? Yun na yung 80,000, di ba? Kasi yun na yung buo. 80 talaga yung na-compute mong total equity component. Ayan, no? So, lagay mo na lang to. Ayan na. So, dito, total equity component is the amount computed when the cash alternative was introduced, which is equal to 80,000. Yun. Okay, so yan yung answer natin dyan. So yun yung mga sagot natin dito. So basically, kapag nag-introduce ka ng alternative, kailangan mong i-split between the original at saka yung in-introduce mong alternative. Tapos yung difference niya, yun yung magiging equity alternative niya. Okay? Pagkatapos, i-amortize mo siya over the vesting period din. Or basically, i-split mo siya or i-accumulate mo siya at i-allocate mo over the over the vesting period. Okay? Kaya ganun yung nangyari dito sa problem na to. Okay? So, yun. 14 tayo. Okay, so for number 14, ang tinatanong sa atin, how much should Adams disclose on the December 31, 2023 balance sheet as the liability for stock appreciation rights? So, madali lang naman to. Okay, so option price is 20 per share. Number of shares, 10,000. Holding period is 2 years. Expiration period is 20x 2003. So, kung kailan yung vesting niya, vesting date na, dun din ang expiration. So, dapat ma-recognize na agad. The stock appreciation is to be paid in cash upon exercise. The market value of Adams common shares, okay, was as follows. So, 2002 ng January, 2002 ng December, to 2003 ito. Okay? So, basically, madali lang naman to, straightforward naman yung computation niya. Magkano ba yung appreciation? Okay? That's going to be, parang intrinsic value din to. 28 na yung value niya. Minus. Previous, magkano yung amount niya? 20. Diba? Yun daw yung exercise price eh. Okay? Tapos, multiply natin ng ilang shares? 10,000 shares. That's going to be 8 times 10,000, 80,000. So, yun na yung sagot. Letter A. Okay, ang tinatanong naman sa atin yung liability sa stock appreciation rights eh. Hindi naman tinatanong sa atin yung expense. Okay, kung expense ang tinatanong, i-consider natin yung 24 nung last year times 1/2. Parang ganun siya. So, ito yung 2003. Okay. Ito yung total na. Kung gusto mong makuha yung 2002, ang gagawin mo, that's going to be 24 minus 20 times 10,000 times 1/2. Okay? So that's going to be basically 4 pesos times 10,000, so that's going to be 40,000 times 1/2, so that's going to be 20,000 lang. Ito yung total. Okay? So, basically, ang expense mo this year, okay, will be 60,000. Pero, accumulated is 80 na. Okay, so yun siya. So, ganun lang naman yun. Okay, 15. East Company issued 1,000 shares of its 5 peso per ordinary shares to Howie as compensation for 1,000 hours of legal services performed. Howie usually bills 160 per hour for legal services. However, other lawyers have different bill prices for essentially the same legal service, giving us an idea na hindi fair value ang 160. On the date of issuance, the stock was trading on a public exchange at 140 per share. By what amount should the share premium account increase as a result of this transaction? Okay. So, ang gagawin mo lang is, 'di ba, kunin mo yung, ang tinatanong lang naman sa atin magkano yung share premium, 'di ba? Okay. So, kunin muna natin yung ating issue price, okay, which is 140 per share. Minus par value na 5, tapos multiply mo dun sa number of shares na ibibigay mo, which is 1,000. So, 135. Okay? Again, yung 160, hindi siya pwedeng maging fair value kasi hindi naman yun determined price. Okay? Kasi iba-iba daw yung billing prices ng mga lawyers. Okay? So, hindi fair value yun. For number 16, AIC Pay adopted ulit. On June 1, 2026, Oak Corporation granted stock options to certain key employees as additional compensation. The options were for 1,000 shares of Oak's 2 peso par value ordinary shares at an option price of 15 per share. The market price of this stock on June 1 was 20 pesos per share. The options were exercisable beginning January 2, 20x7 and expire on December 31, 20x9. O Corporation used the binomial option pricing model and estimated the value of each option at 7. Ang daming kinwento, yung binigay naman pala yung fair value. So wala tayo paproblemahin, yan na yung fair value mo, 7 pesos. On April 1, 20x7, when Oak's stock was trading at 21 per share, all shares were exercised. What amount of pre-tax compensation should Oak report in 20x6 in connection with the options? So the answer there will be yung 1,000 na share options, okay, multiplied by 7, which is 7,000. Okay? Wala naman kasing binigay na vesting period, di ba? Wala namang sinabing kailangan ka pang mag-render ng service, etc., etc. So, it is assumed already na it is already vesting or it has already vested. So, automatic diretsong computation, 1,000 times 7 agad yan. 7,000. Letter D. Okay, next. Use the following information for the next 2 questions. Okay? So, lagyan na lang. Wait, ayusin lang muna natin yung solution dito. Palitan lang natin yung kulay. Para at least consistent siya dun sa ating solution. Okay. For number 17, on January 1, 20x6, the company granted an employee an option to purchase 3,000 shares of the company's 5 peso per ordinary share for 20 per share. The option became exercisable on December 31, 20x7. So, 2 years vesting period. Okay? After the employee completes the 2 years of service. The option was exercised on January 10, 20x8. The market prices of Doros stock were as follows. So, ayusin lang natin yung prices natin. Okay. So, dong number 17, the Black-Scholes Merton option. Yan yung kompleto, Black-Scholes Merton. Pero usually kasi Black-Scholes lang ginagamit. Hindi ko alam bakit nila tinanggal si Merton. Okay, so anyway, so Black-Scholes model natin estimates the fair value at 8. So at least given na yung 8, walang problema. For 20x6, magkano ang compensation expense? So kunin mo yung 3,000 shares, multiply natin ng fair value na 8, kasi 8 yung fair value based on the Black-Scholes model. Tapos 2 years, so divide by 2 na lang. Ang lalabas ay 12,000. Yun yung expense natin. Okay, yan yun. 12,000. Pagdating sa number 18, assume that Doros plan is an unqualified plan and that the corporate tax rate is 30%. calculate the after-tax cost of the stock option plan, okay, in the income statement. So pag ang labas lang niya dahil siya ay unqualified plan, so subject sa tax, no? So ang mangyari ngayon diyan, yung sagot natin doon sa number 17 na 12,000, subject mo lang sa tax. So mabibigyan mo siya or ang net effect niya will be 8,400. Okay? So letter A 'yon. Ganun lang. 19. So for number 19, the company's employee stock purchase plan specifies the following. Yan. For every 1 peso withheld from the employees. Sin ko lang to. Okay. So for every 1,000 withheld from employees, okay, ang gagawin, mag-contribute yung employer ng 2 pesos. The stock is purchased from Wall's Treasury stock at market price on the date of purchase. The following information pertains to the plan. Okay, so employee withholdings is 350. So ang expected na i-contribute ay 700 kasi times 2. Market value of the 150,000 shares issued is 1,050,000. Tapos carrying amount of the treasury stock issued at cost is 900. Before payroll taxes, what amount should Wall recognize as expense in the 20x1 for the stock purchase plan? Okay, expense lang naman ang tinatanong, di ba? So walang issue yan. Huwag kang mag-overanalyze. I-consider mo pa yung mga employee withholdings, etc., etc. Ang expense mo lang dyan is kung magkano yung part ng employee, okay, in that particular plan. So, ang sagot mo is 700,000 lang, letter C, which is the employer's counterpart doon sa plan na yan. Okay? So, yan siya. So, letter C ang sagot. 20. On January 1, 20x6, PAL Corporation granted stock options to key employees for the purchase of 40,000 shares of the company's ordinary shares at 25 per share. The options are intended to compensate employees for the next 2 years. Okay, so 2 years vesting period. The options are exercisable within a 4-year period beginning January 1, 20x8 by the grantees still in the employ of the company. No options were terminated during 20x6, but the company does have an experience of 4% forfeiture over the life of the stock options. The market price of the common stock was 32 per share at the date of the grant. PAL Corporation used the binomial pricing model and estimated the fair value at 10. So, given na yung 10, mas mabilis. What amount should PAL charge to compensation expense for 20x6? So, kunin mo yung total na 40,000 shares, multiplied natin dun sa fair value ng option na 10 pesos, multiplied by the expected na mabibigyan, which is 96%, based on a 4% forfeiture na binigay dun sa problem, 4%. Tapos, 1 year pa lang tayo out of the total 2 years. So, divide by 2 mo na lang. Kaya ang lalabas ay 192. Okay? So, letter C ang sagot natin sa number 20. Okay. 21 tayo. On January 1, 20x5, Health Corporation established an employee stock ownership plan. Selected transactions relating to the plan were as follows. Ang tinatanong sa atin, magkano ang compensation expense? Okay? So sabi, on April 1, 20x5, yung employer nag-contribute ng 45,000 cash and 3,000 shares at its 10 peso par value ordinary stock to the plan. On that date, the market price is 18. So ang kinontribute na nung April 5 or April 1, 45 plus yung 18 pesos per share na 3,000 shares. Okay? On October 1, the plan borrowed 100,000 from Union National Bank and acquired 6,000 shares of the common stock in the open market at 17 per share. The note is for 1 year, bears interest at 10% and is guaranteed by the employer. And then on December 15, the plan distributed 8,000 shares of the common stock to employees of the employer in accordance with the plan. On this date, the market price of the stock was 20 per share. Ang tinatanong sa atin, magkano ang expense? So, ang expense mo lang dyan is kung magkano yung pinrovide mo as the employer for that particular plan, which is equal to the contribution that you did on April 1. Okay? Kasi yung inutang mo that is related to a payable, which is not a contribution, okay? So hindi yan part ng expense. Okay? So, yung last naman na December 15, settlement lang yun. So it is not going to relate to expense. So ang sagot natin sa 21 is letter A, 99,000 being equal to the contribution made by the employer to the plan. Yan. 22. Bigyan lang natin ng highlight to. Okay. 22 and 23. Okay. So, on January 2, 2006, the corporation granted its president 20,000 stock appreciation rights. On exercise, din is entitled to receive cash for the excess of the stock market's price on the exercise date over the market price on grant date. The rights are exercisable beginning January 2, 2008 and expiring on December 31, 2008. So, ano to? 2 years vesting period, no? Okay? The market price of the stock was 30 on June 2, 2006, which is the wait lang. 20, tama. So, 30 on 20x6 ng January, tapos 45 on December 31, 20x6. Mori used the Black-Scholes-Merton pricing model and estimated the values of each right at 16 pesos each. Okay? So, as a result of the stock appreciation rights, the company should recognize compensation expense for 20x6 off. Okay. So, kasi in the absence of the valuation method, no, ang gagamitin mo na lang dyan is kukunin mo yung 30 pesos, at saka yung 45. So difference niya 15, di ba? 15 times 20,000 share divided by 2. Ganun sana ang sagot mo doon. So kapag ganun, ang lalabas sana ang sagot is 150,000. Pero that method is only the intrinsic value method, di ba? Kasi kung walang binigay na fair value at inception. So letter C sana sagot mo dyan. Kaso in the problem, binigay yung 16 pesos na fair value, okay, of each right, yung stock appreciation rights. Okay? So yan ang gagamitin natin. Kaya ang solution natin for 22 is ito. Letter D. Okay? Kasi binigay yung fair value ng stock appreciation rights. Okay? At December 31, the market price of the stock is 47 and the Black-Scholes-Merton pricing model estimate the value of the option at 18. So, walang problema. Magkano na daw ang i-report na liability? So, sundan mo pa rin yung 18. Okay? Kung hindi binigay yung 18, edi ang gagawin mo, 47 versus the 30, which is 17. Yun ang gagamitin mo. Pero, yun nga, ang sabi 18 nga daw eh. Edi sundan mo lang yung problem. So, 20,000 shares times 18, kahit wala mo lang 2/2, parehas din lang naman yun. So, 360 na siya. Okay, so ito na yung answer niya. Tapos kung gusto mong makuha yung sagot ng expense for the current year, ang gagawin mo, kunin mo yung 360 na total, ibawas mo yung 160 na recognize mo ng previous year, which is going to be 200,000. Yan. So, ang expense mo for the current year, 200. Pero yung total liability dun sa stock appreciation rights, 360 na. Okay, so yan yung 23. 24. On January 2, 20x3, Mori Corporation granted its president 20,000 stock options. Okay? Or stock appreciation rights pala. For past services. Past services. So, ibig sabihin, vested na to. On exercise, din is entitled to receive cash for the excess of the stock market's price on the exercise price over the market price on the grant date. So, Dean did not exercise any of the rights in 20x3. The market price of the stock was 30 on January 2 and 45 on December 31. As a result, magkano daw ang compensation expense for 20x3? The answer there is, since walang vesting period, diretso, wala ring binigay na fair value. So, pagbabanggain mo na lang yung 45 na fair value at saka yung 30 dito, which is 15 pesos. Times 20,000, that's already 300,000. Letter C na agad. Wala na tayong vesting period kaya wala nang allocation. Okay, so automatic na yan. Okay, number 25. I think this is a similar question doon sa taas kanina. Magkano yung, si Adams din yon. Okay, recognizes liability for stock appreciation, right? So similar computation, tinatanong sa atin yung balance sheet liability. So, kunin mo yung 28, ibawas natin siya doon sa option price na 20. That's going to be 8 pesos times yung 10,000 shares is already 80,000. Kung gagamitin mo yung last period, so may same computation tayo sa taas, 60,000 yung expense natin currently. Okay? Pero total natin na utang is 80,000 na. Okay? So, yun yung answer natin for our tawag dito. That's our answer for our stock appreciation rights. And yan na yung last question natin for share-based payment transactions. Yan. Okay, so basically yan lang din naman yun. Basta sundan mo lang actually yung given. Huwag mo lang kakalimutan kung ano ang difference ng liability or yung equity settled at saka yung cash settled, no? Kapag equity settled, basta hanapin mo yung fair value on grant date, i-maintain mo na yon. Wala ka nang i-remeasure or wala ka nang gagamiting remeasurement. Except for those items that are already determined at grant date. Okay? Pero for cash paid or cash settled share-based payment transactions, ang kailangan mong gawin ay i-remeasure mo every period end until magkaroon ng settlement. Okay? Tas lahat yan ay papasok sa P&L. Okay, so yan yung item natin for our share-based payments. Okay.